Good afternoon, everybody. Just like to introduce the investment performance report being given by Horizon Advisory Services. My name is Nick Jacobs. I'm the chairperson of the board of the various diversified funds. Just a little bit of housekeeping. From a governance perspective, I'd like to confirm that certain key compliance measures as required in terms of the Act have been achieved in as much as all funds audited accounts are up to date and have been submitted within the time period allowed and are unqualified. All the funds are valuation exempt as allowed by the Act, and the funds are totally compliant with the requirements of Section 7 of the Act regarding the composition of the board. In fact, the board comprises 4 completely independent trustees, independent that is of any service provider involved in the management of the funds, plus 1 trustee who is a service provider. The purpose of today's webinar is to provide a report back on the fund's investment performance, as well as insight on the underlying investment managers. As a board, we are not investment experts and therefore seek the professional advice of people who specialise in investing on behalf of retirement funds. Retirement funds invest members' money with the objective of providing inflation-beating returns over the member's working life, with a view to providing a meaningful benefit when the member reaches retirement age. To achieve this, the boards have selected Horizon Advisory Services to partner with them to achieve the best desired result in terms of investment outcomes. On that note, it gives me great pleasure to introduce Johan Buerter and Henry Niedenhaber of Horizon, who partner with the boards, as I mentioned, by providing advice and guidance in the management of the fund's investments. Without further ado, I would like to hand over to Johan.
Thank you very much, Nick. I hope everybody can hear me well enough. Thank you for the opportunity to give you a bit of a backdrop regarding our operational model and the process that we follow to supply the Board of Trustees with enough information to make a decision on investment allocations. That's quite important, and it will come out in the presentation itself. Over the last 15 years, we've tried to perfect this model as best we possibly can, and the idea is to put the trustees in a position to make a decision, and then thereafter on quarterly trustee meetings give them a full feedback on the actual results of the allocations. We are happy to report back that the process has been working very well. There's a couple of managers whom I will mention in the presentation that have come to the party, and they've really done very well. We're very happy with it. I was specifically requested not to go too much into the quantitative analysis. So we are going through a process which we follow with the Board of Trustees as well, in how we present to them and how we try and put them in a position to make a good decision according to PF 130. The investment policy statement, which we drew up over time, is based on PF 130 as the base document, and that allows the Board of Trustees to make sure that they make a good decision based on the information that we supply to them. So, without further ado, I'm going to run into the process of how we supply them with the necessary information. We always start in looking at the international impact of the whole world, basically, and try and put political perspective to the results in investment, but also the impact of the political investment or perspective on the economies, and then eventually the economic impact on investments per se. Then we move a bit closer to the local environment, whereby we emphasize what does impact investments from a political perspective, going into economic perspective, and then into the funds itself. By doing that, we try and show the Board of Trustees that the fund managers whom we select and then propose to them as choices for the different investment members, that there's a definite golden thread to follow. In other words, international impact should be taken up in a decision regarding fund allocation, and so the local impact as well. So the whole process that we focus on is more of a qualitative approach in trying to assess which managers will suit the fund's needs according to its IPS to the best of our ability. And then just to finish off in today's presentation, I'll just run you through these processes which Horizon Advisory Services follows, which we have developed over the last 15 years. And to us, it's a very simplistic process, but it's a realistic process as well. And in the presentation, I'll refer to it as well. But we found over time that often quantitative analysis are presented to the board, and often the board gets lost in all of those quants, and eventually stuff boils down to decisions based on costing alone. And that's very dangerous because that's not fundamental investment decisions. So we try to put the board in a position where they understand why we select certain fund managers to invest in, and the costing is something which we thrive to lower with the different placements in any case. So to start off with, we always look at the international impact of any decision that one makes on a local and on an allocation basis. And some of the stuff I'll just touch on quickly. As an example, at the moment in the US, it's all about interest rates. So that's critical to understand. It's not only an impact that will affect the US markets, but it will also affect the rest of the world's market. Just as the Fed has mentioned that they are looking at adjusting interest rates upwards, it's already had a negative impact and a little bit of a pullback, excuse me, on our markets. And so it has an impact on the UK markets, on Asian markets, and it's therefore critical that we keep the Board of Trustees posted on what the Fed actually suggests regarding interest rate adjustments. At the moment, they've indicated, and it's calmed down the market quite significantly, that there most probably will only be 2 interest rates rises if inflation shows that it should happen over the next 2 years up to 2023. And that impact will definitely have some kind of an impact, or change will definitely have some kind of an impact on the markets across the world. Then we would typically look at the role that Mr. Biden now plays. It was quite easy in the Trump era to understand what he's going to do, as he was on Twitter and all different other social media and making everything quite clear before anybody else knew about it. Mr. Biden, however, is much more reserved. We can't fully yet understand the direction that he wants to take. So what we did in the interim is to look at firstly, the stuff that he's definitely come up with, and that's corporate tax rates and more taxation for high net worth individuals. So that's something that he definitely put to the fore that will come into play. Stuff that is taken up as well is the discussions with Mr. Putin recently, where he called him a killer, and then apparently in their conversations explained what killer means in that context. And Mr. Putin was quite happy with it, apparently. Now, in following that, it seems like the political guys, the presidents in the US specifically, have a definite agenda that they need to follow for the first couple of years. And it seems as if it's around 2 years where they have a definite agenda, which each of the presidents follow. They follow the same route. They all speak to Russia. They all speak to North Korea, which is now, well, Trump started it, but he's following on with it. And North Korea is apparently in the next speaking conversation coming up, and the trend is definitely there that they're following specifics during their first couple of years, and then one starts to see what their actual agenda is and in which direction the person is actually moving. So we can't yet clearly say what Mr. Biden is going to do, but there there is a definite direction regarding all US presidents that we can pick up at this point in time. So there's no negative effects on the market yet coming from Mr. Biden, although he mentioned the corporate tax rate and the tax rate for high net worth individuals. But we'll see what the outcome of that is a bit later. On the economic data, the jobless figures currently is at 5.8% from a 3.5% pre-pandemic. We suggested that it should go back to around about 5% about a year and 2 months ago. We sent out a letter regarding that, and we based it on the fact that the job creation a lot of job creation took place in the space of people 65 and older. And when the pandemic struck, if one thinks about it from a logic perspective, and I was 65, already retired, and I go back to employment, and the pandemic hits, why would I go back to employment thereafter again? So we didn't think that it should go back to that 3.5% pre-pandemic. Another thing that influences decisions at this point in time, and inflation as well, is the stimulus packages which Mr. Biden has put in place. And we'll have to wait for that to work out of the system. It's very difficult to assess what the actual inflation on the retail side is at the moment, because those packages has pumped a lot of money into the economy, and it's up the inflation, and we don't know yet, and so the Federal Reserve also don't yet know whether that's the stimulus is the reason for that up in the inflation, and we'll have to wait and see on that. But if we revert to something like the Nasdaq, it's still doing well post-pandemic. Just yesterday it hit a high again, and the tech stocks are definitely in favor. The total PE, or the PE at the moment, is at 98, which in general terms would suggest that it's very expensive market to dabble in. But if you look at the share like Tesla, the PE is at 601 at the moment, but it was up to 900. So it's not as expensive. And I think back about when I was privileged to go and attend a Berkshire Hathaway annual general conference, where Mr. Buffett was asked by one of the people in the gallery why he often invests in businesses which has a high PE. And he simply answered in saying that because it's a good business. And that's something we'll have to get to know better, and not look at PEs alone, because that can throw one off the track. And we don't yet know fully how this new world economy will play out going forward. But we do know that tech is definitely a core to it, and we need to understand where our fund managers invest regarding tech stocks. So Mr. Biden's direction is still unclear, and we're still in a bit of a lull regarding where we're going after this amazing recovery we also in the funds. Going over to China, production was kept at a high rate during lockdown last year, just after lockdown, and it's kept on producing, and that meant that they built up quite a huge inventory while the rest of the world was actually in a bit of a recess. So exports at the moment are still flying, and retail sales within China is quite high still, a year and a bit after the pandemic, a 12.4% increase year on year in May. And it is a bit down from April, where it was at 17.7 year on year. But that still had a bit of a tail regarding the initial lockdown in March of last year. So the total expected growth, GDP growth for China this year is up to about 7.6% again, which is amazing. And that means that there are definitely scope for investing in China as well. We do know that Mr. Biden is a bit more empathic. I don't know how you want to put it. A bit more. He's not as reluctant as Mr. Trump regarding China, although he's skeptic about it, and he just recently at the G7 summit tried to sweep up the guys against China. So we still have to see how that plays out. But China is pumping at the moment, and it's going very well. So it's something to consider. In our world, locally in South Africa, That has an impact on Nasdaq's process because of the holding in Tencent in China. And therefore, it's quite important for us to understand how that market is going to react post-pandemic and also on the tech side. Just as a point of interest on the side quickly, a lot of people have asked us on Bitcoin. We've done quite a bit of research on Bitcoin. We came to the conclusion after speaking to a number of fund managers and looking at their analysis on it and not forming our own analysis, because remember, we're not quants guys. We believe that the fund managers should focus on the quants. The golden thread answer that we get from all of the guys are that Bitcoin itself is not necessarily a good investment, but the underlying technology is, however, good technology in the blockchain technology, which is an accounting system in essence. And that, according to all the guys in the different fund manager environment, is a good system, and it works very well. The problem is economic concern, and that is what backs Bitcoin, because there's no central or Federal Reserve or central bank that backs Bitcoin. And a Federal Reserve or a central bank is backed again by gold reserves, foreign reserves, and the economy itself. So if you strip that out, then you are left with a coin, and it's unclear what that coin actually is, and does it have any real economic value. So I wouldn't venture as far as to say that it is a pyramid system or a pyramid scheme, but it is a concerning issue, and it's something that's not definite yet. But if one or the other central bank starts to make use of a cryptocurrency, not necessarily Bitcoin itself, then cryptocurrencies will come into play. But typically, that's how we look at it. And just back to China, one of the areas of concern regarding China is the production of Bitcoin, because those production houses apparently are huge warehouses where a number of computers are held, and the people keep on generating and building Bitcoins. But the problem there is that you use a lot of electricity. And China is mainly driven on the electrical side by coal, electricity generation, similar to us in South Africa. And that's a concern, because that again has a negative impact on the environmental side, with a lot of pollution taking place. So it's interesting that you generate something new age, if you want to call it that, but you still have to use coal to generate it. And that's a concern. So in essence, Bitcoin is not at a good place yet, but we'll see how it develops. And when it is allowed as an actual investable vehicle, then we obviously will look through it via the eyes of the different fund managers and not make a decision on it per se ourselves. On the UK side, just interesting, I did this presentation to the Board of Trustees a while back, but I just looked at the GDP of the UK, and it consists of around about 80% services, and in specific financial services, versus South Africa's around 60% services. The UK industrial side contributes around 19% versus South Africa's 26%. The UK is, however, still around the sixth largest contributor to world GDP at around 3.3%. And this is a concern because last year's GDP was at nearly minus 16%. And we've actually outperformed the UK on that side, on a negative side. The UK size itself on a physical base is around 224,000 square kilometers, and South Africa 1.2 million. UK 64 million people, SA 57. UK minerals, coal versus SA minerals. And all our minerals are needed in the world, whereas the UK basically only have coal. The deduction is we can turn our country in a very, very productive mecca, but the UK has a problem. So vaccinations, however, is a different story. They are excelling at the vaccinations, and that's wonderful. They have overtaken, I've looked at the figures this morning again, the US in the run to achieve herd immunity. It seems as if both the US and UK are now struggling with getting people to be vaccinated, which is quite a concern. And I see it tapering off at some point in time. There's a huge drive and which we are only starting with at the moment in SA. We're all uncertain and unclear of where we are going, but they are obviously moving in the right direction. So on that side, good for them because they can get back to production and possibly filling up the office spaces much quicker than was anticipated. They need to do that because there was a huge outlay of bricks and mortars in London city centre. And those of you who have been lucky enough to have gone to London, I'm always amazed when we go there for due diligences to see the amount of buildings that are there and the amount of people walking around there. And I would have dearly liked to see it during lockdown. It must have been a horror story on its own. So that's a concern for the UK, because if all the service providers on the financial services side realize that they don't have to go and use the bricks and mortars anymore, you're possibly looking at pulling the plug on the financial services sector, and the guys reverting back to their home countries with technology being where it is. So that is a concern in the UK, and therefore we also need to look very carefully at where there are investment opportunities in the UK. The Ford deal in South Africa is also a concern for the UK, because now Ford can with the expansion of their plant locally here in Roslyn in Pretoria, can produce so much more vehicles, and they can export to the rest of the world, and they don't have to look at UK factories as much. And that's a concern to the UK, and so with Mercedes and the Nissan deals. And similarly, export of wine. Export of wine, if France don't want to do business with them anymore, it's a concern regarding wine, but it's also a good thing for us because we can export more wine to the UK. So yeah, that's not necessarily a bad thing. We can set up very good new relationships with new exports and imports to the UK, and also with Europe, although they are not on speaking terms really. France is quite important to us as well, with the solar investment that they're doing in the Karoo area. At the moment, it's quite important, and we recently saw Mr. Macron visiting after Angela Merkel had a visit last year. So it seems as if Mr. Ramaphosa is getting something right, and in doing that, he also landed an invite to the G7 summit, which you most probably all saw recently. And that's a big one for South Africa, because just to have a voice on behalf of Africa is incredibly important, and that adds to Mr. Ramaphosa's drive to get local production going. And if local production keeps going and people start investing in South Africa, production can really be upped, and then export into Africa from South Africa would become a big driver, so that the international guys know that they come and invest in South Africa, which is regulated. It's highly regulated still. Our banking system works extremely well in relation to the rest of the world's banking systems. Our auditing systems are good after the Gupta scenario was played out. Our auditing firms are really doing well as well. Our corporate governance is based on the English law, which is wonderful. And it's a good system that is working. Our bond exchange, stock exchange, everything is first world. So we've got a first world business platform, and that is what Mr. Ramaphosa is driving. So if you've got that protection on your money, and the land issue starts getting to a good point, it may just work out in our favor. Although I feel for the UK, and I hope they can wiggle themselves out of a possible shutdown regarding the, financial services side. So the deduction, as I've explained already, is there's a lot of opportunities with Ford, Nissan, Mercedes, and the UK do have a problem, but we'll see how that plays out. That's just a quick backdrop on the international side. We usually discuss quite a bit more in the trustee presentations, but I've got limited time to talk here, so I try to rush through it as best I possibly can. We try and look at it from that perspective, because if we converse with fund managers, we ask these type of questions. When we do our research on our own and doing a due diligence with a fund manager, we've got quite a bit of ammunition to ask questions on. And if we see that the fund manager is not really on the same page as as what we have come to understand from our research, the conversations do become interesting, because if you don't have a good insight on international allocations, how do you actually allocate in a specific fund on the international side or the offshore side? So it's very important that they also understand the international side of politics and economy. On the local side, there's a couple of things. I'm just mentioning a couple of things, and it's a storyline that I'll just read to you. Basically, it's Eskom, local investment, FDI, vaccinations and tourism. And in that specific order, it's very important to keep it in that order. Firstly, if Eskom is down, there's no lights, there's no electricity, you can't produce. So a lot of people ask, but why is there such a focus on Eskom and not SAA to get SAA running? It's critically important. As we've all seen the last 9 or 10 days now, Eskom hasn't been down. And to us, that's important. I hear there's a lot of people asking whether Eskom knows about the problem, and we'll notify them in due course. But Eskom is changing very well. It seems like the storyline is that the 80 billion less debt is has already been conveyed or explained to the media by Mr. Gordon. That's wonderful, because the debt is now close to 400 billion, which is not wonderful, but it is better than 480. As the maintenance programs continue and the expenditure loss or the unexplained expenditure works out of the system, one would see that this debt should come down further. At the same time, it's important that production keeps on going, and that Kusile comes on board now in September, it seems, in full. And then it seems like Medupi should be up and running in 2023. Now, we do understand that it should really happen, because that was one of the important aspects which Angela Merkel brought to South Africa, in that she sent over a bunch of Mercedes engineers. And they actually came over not to work on the Mercedes plant down in the Cape, but to actually go and assist in getting Eskom up and running in full. And that's very important. And that was probably about 6 to 8 months after Merkel was here that those guys landed. And that positive news wasn't really thrown into the system. It slowly just disappeared. And it was quickly mentioned and then disappeared. But it was critically important, because if you think about it, if there's a number of German engineers coming on behalf of Mercedes to make sure that the electricity is up and running so that they can produce more cars down in the Cape, then it's quite important for the Mercedes oaks. And that means that as they come and they see what all the problems was, they're not concerned whether they are going to step over the red tape if they make noises and say where the problems are. And that's obviously how they exposed the problems at Kusile and Medupi. And you would probably recall that Kusile and Medupi's managers were fired quite quickly after the Mercedes guys were here. So it's interesting, one can make those deductions. So Eskom is going well. That means that local investment did pick up, especially if you drive here between Pretoria and OR Tambo. One sees a huge amount of development taking place from a production and warehousing perspective. And it definitely is a clear indication that local investment is picking up quite significantly. We can also see it in the jobless figures, and the job creation side on the production and construction side has picked up significantly already. And we can also see that as an outflow in our GDP, which was 1.1% in the second quarter of this year. So if that GDP figure keeps ticking over, production and construction keeps on ticking over, Cyril's plan will most definitely work, in the sense that they generate more jobs on the ground, instead of giving more jobs to the guys in municipalities and in senior government positions who basically loot and steal. So it's important that you generate more jobs, more people will be looked after, and that means that joblessness would come down We are keenly awaiting the vaccinations thereafter to come down as well, because FDI is critically important after local investment. Cyril also made it quite clear that you first have to invest locally and show the world that you believe in your own system. And that's what Corporate SA has done. There's other studies that we followed regarding where the money comes from, which I can't expand too much now, but it is definitely there, and it's coming, and the local investment is picking up quite well. That means that Cyril has something to market when he goes to the G7 summit, to say that we believe in our system, our corporate environment invests locally, and you guys are welcome to come and do it as well. The vaccinations thereafter is very important. It has to kick in, it has to go on. I believe that although there's a lot of negativity regarding the vaccinations, at least we have a plan. We have a registration platform, and it seems like we are in process of overtaking a lot of countries regarding the numbers. And I've just watched the numbers, how long it took us to get to 1 million. But thereafter, how quickly we went to 2 million, and we're upping it at quite a rate at the moment. So if you look at the rate of vaccinations at the moment, and you see where we can end at around 150, 200,000 per day, then we should actually be finished by about February, March of next year, which is interesting. And the negative doom prophets then can't revert back to their deductions of 18 years. It was quite a funny joke at the time, but it's not really that funny with all the infections taking place at the moment. This really needs to be driven. And then thereafter, tourism will kick in again. And we have to get to that, because tourism, the jobs in tourism were depleted at a real bad rate. And that has to pick up again. And if that happens, as soon as the vaccinations kicks in and international travel is allowed again in totality, foreign direct investment will pick up again as well. And your jobless figure should actually dip quite quickly below 30%. And that we need to keep driving. So the trajectory is quite good. We're quite happy with what Cyril is punting to the likes of the G7. There's only 4 countries that were invited besides the G7 countries to attend that summit, and that's a huge vote of confidence for Cyril and the direction that he's moving in. So I try not to look at all the criticism, but rather look at different political analysts. And Henry and I do a lot of reading up on it as well, and listening to a vast amount of people, as well as the due diligences, to try and assess if this is real, if the stuff that's happening is real. But we also then look back at where we were when Mr. Zuma was in control, and we see how stuff has changed already. And it's incredible how much stuff has changed. So it's often good not to sit too close to the fire, but sometimes move away from it and to look around and see how the environment actually has changed. And it has changed significantly. So with that kicking or coming to mind, all this information that we gather, we can start seeing that the fund managers also see that. And in them seeing it, we can start seeing that allocations to our local markets and bonds, etc., does pick up, and that's good news. So a lot of the fund managers in the last month whom we have seen are very keen on the South African market. They're still a bit skeptic here and there, but they are slowly but certainly moving into the South African market, and that has worked in our favor immensely, especially on the balanced side, the balanced type funds. With the restrictions on the offshore allocations, it means that a lot more had to be invested locally, and these guys have really gone through the roof on the performance side. So we're very, very happy that the logic that was followed regarding international side and then a local impact, that we are moving in the right direction, and investment is looking good at the moment. So just to put a couple of companies on the board regarding investment, FDI, that has taken place. It's good to just see those badges, and so that it becomes a reality in our minds. And if I just look at it quickly, Heineken is in discussions buying to buy Distel at the moment. Ford has already started with their upgrade on their plant, 15.8 billion rand. Mercedes 10.2 billion, Nissan 3 billion, and Pepsi has bought over Pioneer Foods as well to generate the soft drink brand in South Africa. And then a very important one is Johnson & Johnson. The whole removal of AstraZeneca was, I believe, not only a virus-related issue, but I think it's also a political and economic decision, because to have Johnson & Johnson now being a partner of Aspen means that not only the vaccines can be generated in SA with Johnson & Johnson, but also a lot of other Johnson & Johnson product. And that's an awesome investment to have locally. So that's just a couple to mention, and that's the FDI that we need, and to expand our economy locally, our jobs, and then obviously our economy to grow on the back of it. Yeah, so that's the Eskom story I touched on earlier. Just interesting, external power suppliers can now provide 100 megawatt, which allows them to actually produce and to actually invest, and to actually start making money. And it can actually be done at a lower rate and a lower cost to what coal production currently provides us. The writer also was very important for our South African employment environment, that he stood firm regarding the accusations on racism. And the end result was to look at people, to put the stake in the ground to say that we should actually look at output. We should look at people actually doing their jobs and not look at the color of skin or sex or whatever. It should be your contribution to the economy should be based on what you add. And that's what Ramaphosa in total is driving as well, is drive the economy, because the economic drive takes away racism, it takes away sex in any way. So what anybody can produce, anybody can contribute to the economy. So that's the direction that is driving slowly but certainly. Land expropriation, I touched on quickly. It's moving in the right direction. It seems that the preambles that was put in place before the constitution is to be changed are the right preambles, and we are moving in the right direction. ACE is actually in the dock today, you probably heard. And over the next 2 days, we'll hear a lot of the happenings in that case. And soon, Mr. Zuma, his case is on the go. People always say that he's going to extend it again and extend it again. He managed to do so, but now he pleaded, and that means that the court is in session, and we'll see what the outcome of that is. Just recently, yesterday now, the harbours have been awarded their own boards. So the harbours are going to start operating quite independently. And that's great, because with independence there's accountability that kicks in. So the head harbour master was also asked to go recently, and SARS implemented taxes directly with the different importers, which is great, because then the guys at the harbours itself cannot put themselves in a position to commit fraud and ask for bribes, etc. And that the money is now paid directly from the exporters into the coffers of SARS, which is great. And just by doing that, implementing it last year already, he's upped the taxes from imports by 2 billion rand just last year. And that's the start of it all. So yeah, we're looking forward to what the outcome of that is. Similarly, PRASA is moving in the right direction. Obviously, I call it terrorism activities regarding stealing of the actual rails and cables is not great for PRASA, and they'll definitely do something about the security. And SAA soon to fly again, which is all positive. The Auditor General, however, a concern which she has is the municipalities, and around 26 billion that was again stolen last year from municipalities. And that is incredible, and it's something, the bleeding will have to be stopped there as well. So you can't only stop the bleeding at Eskom, at SAA, at PRASA, correct SARS and generated tax morality, you always also have to stop the expenditure, the irregular expenditure on the ground level, and that's where municipalities kick in. So it's very important because investment has to be wide and far, and you also have to look on local level if there's investment opportunities. If you look at just the cheese manufacturer recently who moved away from Lichtenburg, I mean, that's a huge economic setback for a small community, closing down such a factory, and that has to be corrected. And it's all about bad roads, bad infrastructure, and that's because people steal, and there's no other way of putting it. So there's a long way to go. But considering that Mr. Ramaphosa is now close on 3 years into his actual first term, because the first year and a half that he took over from Mr. Zuma was not his term, it was just taking or completing a term, and it was therefore not his full term. So hopefully we get another 5 years of him after this 5 years, and he can make sure that there's some kind of a follow-up for him as well, in the likes of Dr. Saul from the Northern Cape, who's a very strong candidate, and also even a guy like Ronald Lamola with 2 LLM degrees, one from Pretoria University and one from UNISA. I think he's a good candidate. He speaks English like I do. Pronunciation is not great, but I believe that he understands his subject, and he's a very logical thinker. So that's possible, guys, that can follow up from Mr. Ramaphosa to keep this storyline going. Then our process is, as I said, is more qualitative in nature. We want to get to the best possible fund managers who understands international impact, local impact, and also then the impact of its placements and allocations within their specific funds. The info gathered is done on an ongoing basis. We keep on gathering this information. The Board of Trustees can attest to that as well. I don't think we bore them. Each quarter when we present to them, we try and assess what the changes in the economic environment is and the political environment and the impact that has on the returns. It helps us as well following this process in that one doesn't make any knee-jerk reaction decisions. Because if there's a fundamental good understanding of the both international and local environments and the political and economic impacts, then you can explain allocations as well. And then the meeting doesn't revert to quantitative analysis and or to costing per se. And that's the most dangerous thing to do. One cannot make a decision on investment allocation on costing only. It obviously plays a role, but one shouldn't play a cost war. And unfortunately, in our employee benefit environment in the past, that was all that it was about, to look at costing. But it should not be. It should be fundamental good investing, similar to what an individual investor has been doing. The individual investing side has been much better regulated over the years to make sure that there's a good advisory process. And I think the process that we are installing to the board on this side from Horizon is also based on advice. We try and marry the ongoing reviews and the due diligences that we do with the IPS, the investment policy statement of the fund, and then get managers who has a strategic fit to the need of the fund. And that's critically important. So currently, as an example, we've got Investec in as an investment choice. So Bidvest Asset Management, the old Canon, and then Melville Douglas and Signia as well. So there's quite a lot of variety there. We do regular due diligences with them. Some of the board members we obviously invite the board members, and some of them have attended in the past, and it's very interesting sessions. Yeah, it's awesome just to see that the board are involved in also understanding what we do on a day-to-day basis. By doing that, we basically open the curtain to the Board of Trustees to see behind our world, and they can understand better when we make certain suggestions on placements. We built this process over a 15-year period, starting out very, very small and still growing. But we believe that if there's an honest process kicking in based on the back of PF 130, and for the reason of providing protection to the Board of Trustees as well in their decision making over time. That should only lead to a good end result for everybody, and we've seen it. In the end, at the end of the Zuma years, we were all concerned regarding the markets. We had to, however, stick to our guns according to the IPS of the fund, as well as the fundamentals, which the fund managers that we do utilize apply. And it meant that we had to stick to our guns and not make knee-jerk reaction changes. And we can report back that over the last 2 years, we've seen the results from the placements that we've made. And we didn't go into too much money market and into too much bond allocations just for the sake of keeping clients, but rather stick to fundamentals. And the end result is evident. We are seeing exceptional good returns from the guys that we have chosen currently, and we're very happy on that. We do give monthly feedback via a document which we send out to the different members. And the administrator uses it as need be on behalf of the fund and send it out to whomever needs it. So if there are people that wants that, please get in contact with Mel, and she'll make sure that you get that on a monthly basis as well. And then quarterly, obviously, we give a feedback to the Board of Trustees. So what we've done here in this very simplistic process is to make it repeatable. And that's critically important in any investing. Many years ago, Henry and I picked it up from Coronation. Each time they do a presentation, we see that their format remains exactly the same. And the trustees can attest to that as well. We keep our format exactly the same, and we populate the information, new information, into that exact format, so that your thinking and your process is established over time, and you clearly understand why you're invested in the way you are. So our process really is a qualitative process, relying on not only DDs with the managers that I've mentioned earlier, but with a variety, including the likes of Allen Gray, Coronation, ABAX, Ford, etc. So all the guys we try and look at, we get to know the guys over time quite well. They also understand that if you don't perform, we will take the money away, but we don't do it from a threat perspective. We rather do it from a consultative perspective, talking to the guys, making sure that we are all on the same page. We don't want to tell them how to manage the funds, but we do ask them why they manage in a certain way, because we have to give that feedback back to the board. And if there's no performance, then the board will obviously stand accountable to you as the members. And that's critical for us to be the interjector between the fund managers and the board and the end members, so that everybody understands why they are invested where they are. We prefer to be totally independent, and so the administrator and so the board members. So the suggested placements are therefore also totally objective. We found over time that if the administrator is owned by a specific corporate, and then the investment manager is also owned by a corporate, and everybody is owned by the same corporate, then how do you get objectivity? It's totally impossible. So if someone can explain that to me over time, I would gladly accept that explanation. The most important thing is, with us being objective, if a manager do not perform over time and there's fundamental problems that do start developing, then we will ask the necessary questions. But if they persist in that, we will make a suggestion to the Board of Trustees to remove them and to replace them with a different manager whom we've also due diligence over time, but will more adhere to what the Board of Trustees requires according to the IPS of the fund. So the checks and balances are wide, and it's a lot of detail more that we can discuss and talk about, and it's not something that one devises over a month, but the process is working very nicely and very well, and we're very happy in how this objective fund in Diversified is managed. So I think personally it's a great offering to give to clients, if you are interested in being objective and understand where you're invested. So the process that's just the conclusion on the exact process and the process that we follow in that 7 steps. Monitoring at the end of the day is critical, because There are times that one choose a manager and you stay with that manager for quite some time. But from our side, Henry and I can't slack on it. We need to make sure that we keep on DDing them, keep on making sure that their processes are working. And by doing that, we do not become complacent. One can easily become complacent, and with investments, it's like a thief in the night. It approaches and you can't see it, and then suddenly you're in a bad space and you can't do anything about it. So we need to not become complacent, and our process forces us not to do so. So yeah, we've tested it over time. Happy with the process that is working at the moment. And that's just a little volatility versus return scatter plot, which we put up, and some of the funds that we do utilize is shown in it as well. And this one is a nice one just on one of the fund managers, showing that the efficiency curve really works and the guys are performing to the amount of risk that they take. A year and a bit ago, it wouldn't have looked like this, and the far right top one would have been down at the bottom because of bad returns. So the amount of risk didn't go down, but the return did. But the efficiency curve has returned to normality, and this is how efficiency curve should look. So we compare it to a variety of other managers, and it's interesting that this specific manager that we show you is outperforming, but so the other guys that we utilize. So we're very happy on the process, and we tested on this volatility scatter plot. So that's just a little bit of quants that we added at the end here, just to show you that this is the end result of the work that we do. And it's often an interesting thing in South Africa when you talk about the KPA or KPI for corporates. People measure outputs, they measure figures. But in essence, one should measure inputs because the input results in an output. And therefore, we've designed our process on inputs instead of purely outputs. Yes, there are going to be underperformance, but if the fundamentals are still good, we'll stick to a manager. But if the fundamentals show that there's problems on the input side, then we need to rather move earlier than later. So yeah, that's us. Thank you very much. I hear that there's one question, Melanie.
You see it,
I can't see it, but let me escape here.
it says, well, okay. See it.
Okay, Annelie, Mariwan, thank you for the presentation. Infrastructure investment is often mentioned. What are the potential and the risk involved for this kind of investment over the short term and over the longer term? That's a good question. I think the infrastructure investment side from government perspective is critically important for the production side to pick up. So the problem that government had was that, and we all know about it, that there is no money. So just to explain to you how the infrastructure investment could go on. Many years ago, Mr. Rupert started by dual listing Richmond in Switzerland. That was in 1973. He said that apartheid can't work, and he started to divest and diversify his investment. And as the investment in Europe started to pick up, they started to make more money on that side. And when they made more money, the primary listing over here or the secondary listing, however it was structured, did get dividend repayments. And by doing that, capital was built up in the balance sheets of the companies that are listed locally. With the likes of Mr. Zuma coming in, people started to not make use of that corporate buildup of funds and rather kept it in their bank accounts. Now, how we understand that to happen is also by doing due diligences and talking to economists of the different fund managers. They have a quarterly update from SARS and from the likes of SARP and Department of Statistics. And from one of those statistical sessions, Kevin Links from Stanlib actually explained to us that there was an excess capital built up of around about 2 trillion rand by corporate South Africa, which is investable money. But they didn't invest in South Africa because of the concern that they had regarding Mr. Zuma and whether that money will again be applied incorrectly and stolen. So therefore, they sat in the wings and waited and waited. And when Mr. Ramaphosa came into play, he started with the investment summits. And those investment summits has built up pledges of around about 800 billion up to now. Now, if you link the two and you know that there are 2 trillion available and 800 billion has been pledged, then you know that corporate South Africa do have the money to invest. But they don't want to invest alone. They need to have the infrastructure investment going as well. And the problem on the municipal and local side is that there's still a lot of stealing taking place on that side. So it has to be from a central government point of view where investment in infrastructure has to take place. And then with this excess money available from corporate South Africa, they do assist in setting up the correct infrastructure to be able to operate. So I think we are on a good trajectory regarding infrastructure investment. And over the short term, when Mr. Zuma was here, it was a serious danger for the guys. But that short term has gone out to a longer term investment, which will yield a return. So I think it is a good investment currently for the longer term, although it was a bad one on the short term when Mr. Zuma was still in power. So we are at a good place at the moment. Any other questions? We're more than willing to assist. All right. So Diane, hi Johan, what is your viewpoint on SA going into another hard lockdown due to COVID and the impact on the SA industry and investments? So on the backdrop of there's an anomaly at the moment. The problem we are starting to see, which is developing, is that internationally the vaccinations are going quite well and the economies are opening up, and therefore the foreign direct investment side is actually starting to become a reality, as I've shown with the likes of Nissan and Mercedes and Heineken, etc. The problem that we have now, that Mr. Ramaphosa sits with now, is that we can't afford a hard lockdown anymore. There may be very much tighter restrictions, obviously coming into play either tonight or most probably tomorrow. But we can't afford a full hard lockdown. I think the economy has already suffered enough. We also picked up that a lot of the corporates have allowed their people or asked their people or forced their people to work from home. But initially it was a nice thing. It was a novelty, and it was nice to work from home. But over time, we've started to pick up in our conversations with a variety of people that there is a bit of a slacking, and that people are getting a bit laid back regarding service. And that's one thing we should not lack on. We should not start lacking on service. Similarly, hard lockdown causes people to work from home, but if hard lockdown happens, schools will also most probably close, and that's again a bad social environment generated. So from a total economic development side, it would not be a good idea to have a total hard lockdown, but that there are going to be tighter restrictions is a definite. I'm sure about that. So I hope that answers your question. Just on international travel, I know that the US and the UK have recently slowed down their or slacked their international travel to South Africa. So the guys are already starting to look at opening up to us, and that's critically needed for our travel and tourism industry. But we're not there yet. So hard lockdown, I don't believe so. But maybe tonight I'm wrong altogether, and then you can write me a bad email on that. I don't know what's going to happen. But I would say from an economic perspective, it would be a bad idea.
Okay, thank you very much, Johan. I hope it's been of interest to all those who attended. Obviously, if you do have questions, you're welcome to contact Melanie, who will no doubt answer them or get an answer for you. And I would like to take this opportunity to thank you very much for your time. Thank you.
Thank you.